So today in this video, I'm going to break down a tool that I have used that keeps me from getting caught in horrible reversal trades. About 2 years ago, I had a major epiphany and realized trading reversals was crippling my equity curve. I literally, every single day, I showed up to the market and I was always trying to buy the low, sell the high. Maybe you're going through something extremely similar. Today in this video, I'm going to show you ways to never get caught on the wrong side of the market again. Reversals do happen, but you need a tool, you need a way that you can distinguish the reversals that are actually going to reverse and then the traps. The traps are what kills retail traders. Today in this video, I'm going to show you how to stay away from getting caught in bull and bear traps. So in front of you, you're going to see a chart. This was Friday's sell-off. Beautiful sell-off. But it's easy to look at the chart once it's already done and go, yeah, of course it was a sell-off. How do you know when the market looks something like this that it's not going to reverse? Or even worse, once we actually break above a level, right? There's a very high chance when price falls below a critical level but can't stay below the critical level, that price is going to reverse. Well, this is where you're going to whip out your moving averages. Moving averages are key. Moving averages are literally God's gift to this green earth because they are going to keep you grounded. They are going to help you avoid traps. But not just moving averages on the 5-minute. We're going to break down the moving averages on the 1 hour and how that kept me from going and taking that reversal and on the contrary, capturing this beautiful move for over 75% return. Right? So this was the trade we took Friday. Price was selling off. I caught none of this on the way down. None of this on the way down. I couldn't distinguish risk. I just didn't like any of it. I allowed price to come back up into this GBI. We're going to break that down too. This green bar that was ignored. Yeah, well look, price comes right back into it, tags the cloud, and then rejects. We go short, and we capture a move for almost 80% ROI, right? Beautiful trade. But Josh, how did you know this? And what kept you from taking the reversal? Amazing question. So anytime you're getting a massive sell-off, I want you to ask yourself this. What does a moving average tell us? A moving average doesn't just tell us who's in control of the market. It shows us, it displays for us a healthy or unhealthy trend. Now I have tons of videos on this, but in this video I really want to express to you how effective it really is. So you're getting this massive sell-off, and every single time I'm watching a sell-off like this, I literally identify the RBI or GBI. This is the off-colored candle that gets ignored, right? So this would be a GBI. I would literally go click, add drawing, and then I would draw a box around it, right? Very simple. And what this does for me is helps me identify a critical point, right? A critical point is a point on a chart that whoever shows dominance is going to control the trend, right? So that's a critical point. There's a ton of sellers and some buyers showed up here. So once sellers push price through it, these buyers are going to get stomped out of their trade if and when price comes back to it. That's the psychology behind it. Now price continues to sell off and we get another green bar that was completely ignored. Hence why we took the trade where we did later in the day. But okay, price is selling off. We get some buyers showing up to the market, and sellers completely disrespect them. Notice here, look at the EMA cloud. The EMA cloud is being respected. This is one way to distinguish a healthy trend. Ask yourself, what does it look like when price is tagging these moving averages? Is it pushing through them? Is it extended from the moving average? Or, look guys, we're literally closing on my 9 DEMA. That's that blue line right there. Yeah, that's my guideline. This blue line has made me more money than anything else in the world. This blue line has kept me from taking stupid trades like no other, right? Because until this blue line gets disrespected, until it becomes unhealthy or inordinary, I am going to trade in that direction. Well, Josh, how about right here? You literally just said as long as it's respected, you're going to go short. Why didn't you go long? That's a phenomenal question. this is where we break out the 1 hour time frame. The 1 hour time frame is going to give you the context you need to avoid getting caught in those nasty reversals we were talking about in the beginning of this video, right? Because think about it. A moving average principle, what is it? The principle of the moving average is that price will either continue or reverse based on the healthiness of the trend. What that means is as long as the trend is healthy, price is going to continue to sell, right? Even in this wild, massive, bloody sell-off this day where we literally sold off, what was this, like $15, notice how we continue to go. Why didn't we sell off this day? Right here. What can we use as a tool to distinguish healthy from unhealthy? And that is an extension. Anytime you get extended from the moving average, there's a very high chance that price is going to snap up back into it. Right? The moving average displays the average price of the commodity over a period of time. Right? So you don't need to know much more other than is when you get extended, you are either going to get chop or a reversal, right? You don't want to be trading in either of those conditions. So what I do is allow the price to become healthy again, and then I enter back into the market with the appropriate trend, right? Look, super extended here. What happens? Price sucks back into it. Same thing happens on the 5-minute time frame, 2-minute time frame, 1-minute time frame, right? Everybody knows what happens when you get extended from a moving average. If you don't, now you do, right? But look at I got the 1 hour on the left, I got the 5-minute on the right. So when price looks like this, it's selling off. We are extremely patient. Once again, I'm not taking any trades here. My only trade I took this day was here at 11:20 a.m. and I took it down to here, right? 12:30, right? So that was my only trade this day. I didn't trade any of this. What kept me grounded? What kept me disciplined? What kept me sitting on my hands? The knowledge, the understanding of the moving average concept. See, once again, when I'm extended, look how extended we were on the 1 hour time frame right here. This is what price looked like on the 1 hour, right? This is a perfect example, but this literally happens every single day. So look at price looks like this. Josh, why didn't you go long here? Well, I'll tell you right now, I didn't go long or short because of how extended we were from the 9 DEMA on the 1 hour time frame. You use this concept, you use this principle, you use this understanding, you are going to become so much more patient. You're going to become so much more disciplined. And you're not going to be getting caught in those nasty traps that are costing you way too much money. The reversals are killing you. And I'm not saying reversals are bad. I'm just saying you're trading them the wrong way. I will not take a reversal trade unless we are extremely extended from this 1 hour 9. And then I'll play into the 1 hour 9. That's the only way. And even then, I would much rather stay patient, avoid all of this nonsense, and then wait for price to come back up into the GBI, right, the critical point, and then once price comes back up into the GBI, identify the sellers coming in, wait for the green bar to be ignored, enter short, and then target low of day. That was literally the trade that we took. We were extremely patient. We stayed away from the traps because we're aware of the moving average concepts. This concept is a game changer. Look at your journal. Do me the favor. Do yourself the favor. Ask yourself, what do all your losing trades have in common? Are they reversals? Are they unhealthy trends? Are they forced, right? Or are you FOMOing in? This is one of the main ways. This is an exercise I do with each one of my clients that keeps them away from FOMOing into trades. The reason why you're FOMOing in is because you are unaware of the moving average concept, especially on the 1 hour time frame. This concept is an absolute game changer. Guys, very simple. When you're extended from a moving average, you do not trade. You allow price to come back up into the moving average, and then you trade with the appropriate trend, right? And only then you allow price to come back up. Maybe it's into your EMA cloud, maybe it's into the green bar ignored, or maybe it's into the 1 hour time frame 9, and then you put on your trade. Those are 3 different tools you could use to never get caught in a trap again. I love you guys. Drop a comment. I'll see you in the next video.